Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is November 7th, 2018, and tonight I'm going to talk about live cattle, the ETF being COWB. The reason I'm talking about this market is because it came up in the presentation I gave today at one of my webinars, and I really want to sort of focus on something that's kind of unusual. So here is live cattle. We have a mixed trend, short, intermediate, and long term, all point in different directions, hence the little asterisks here. We have the technical rating, which is still positive, but it's this mixed trend that is kind of most interesting to me. And so what I'm going to do is I'm going to show you our depth gauge indicator. This is something that is applied to all the different markets out there, and what you'll see is that it's basically, it finds a bottom and very quickly reverses, finds a top, quickly reverses, all the way through there. Now that might not be noticeable to some, but we're right now in a condition where the market is neutral and mixed, meaning we're at one of these little turning points in the indicator. So right now the market had been bullish, now it's in a neutral phase. If we take a look at the tendencies to the market and we look at that same depth gauge, what we'll find is that when we come into a neutral phase as we are right now, one, it's highlighted, meaning that the market is in that particular stage, and here is live cattle, 7.77 essentially percent of the time we're in this neutral phase. Of all the markets we look at, and there's 40 odd markets here, what you'll find is that the one that spends the least amount of time in this neutral phase is cattle, which means if I come back to the chart, it quickly reverses. It doesn't meander, doesn't stick around, it doesn't kind of move sideways. It's decisive. That's what that tendency is talking about right through here, meaning that 7.7% of the time when it's in this phase, it comes out of it very quickly, as opposed to aluminum and copper and LME copper and LME lead, natural gas. At least the top four are industrial metal types, where they can spend 26, 22, 21, 18% of their time in this meandering kind of nebulous phase of neutral trend, not live cattle. It is the most efficient, if you will, of the markets. So what does this mean for us? If we actually take a look at the seasonal tendencies to the market, you can see that there's a little downtrend. Now, very soon here in November, coming up, but not right now, there's a strong surge to the market, but for right now the market is pointed to the downside. If we actually take a look at the systems, we have two systems, both of which have triggered just recently. They're both short, they have open position profits, but what is interesting is this nebulous kind of stage that we're in here with cattle. Is it in fact going to start to reverse course and start to head lower? Or is this little nebulous stage that we're in just a resting point for the market to head higher? Obviously, as I just pointed out, the systems are actually short the market on a short-term basis. But when it comes to looking at the market itself, I'm just going to point out a couple of things here. You can see that the market on these daily bars for live cattle, it's been an uptrend, but it's not necessarily been a strong trend as of late, and the market itself through most of October has just been moving sideways, and finally we had a bit of a sell-off here just the other day. So with that being the case, we're between the 50-day and the 200-day moving average. It's kind of an energy zone where the market is going to probably pick up a little bit. If we come across and just look for any type of support, it's back through here. It's a 10. That signal level that we have right here is relatively weak. It's only a 10. It's not like a 28, which is stronger here. If we pull that all the way across, that's when this particular bar broke down. So we do have a little bit of support. It hasn't touched, and you can see that it's above the 200-day moving average, which is what this gray line is. So the point is that if we're not able to hold here, obviously we'll break this support level. If that's broken, we'll come down to the 200-day moving average. If we break that, then this is the key level that we're going to be heading down to should the market really start to tank. So on a short-term basis, if we come back to the website and we look at the seasonal tendencies to the market, it doesn't have too much more time before we get this little bit of a bounce, if in fact that bounce is going to take place. So we're at this kind of interesting point in time with cattle in looking at the depth gauge and the tendencies of the depth gauge. It's saying that the market wants to head lower. The systems say we want to head lower. The support levels to the market are strong enough, but if we can break that 200-day moving average and go down to that lower support level, that's going to be a pretty good trade on our side. But the seasonal tendencies are telling us that although there's a little more bias to the downside, soon, not now, but soon, we theoretically could get some type of a bounce to the market. So the point is that what you want to do is watch the systems. I think that will be the best case scenario, just to see how things kind of play out here. But there's an opportunity for, with the depth gauge and what I've been talking about with the reversal, there's an opportunity that this could actually turn into a halfway decent trade. If for some reason we do based on the seasonal tendencies, we'll see if there's a big enough bounce to the market to liquidate the positions. But both of these systems, a 90-minute and a 90-minute, two separate systems, two different strategies, one trend, one pattern. They're obviously looking to the downside, but they're short-term systems, both 90-minute bar systems, so they can react very, very quickly. So we're at this point right now where there's an opportunity for the market to really sell off. So when I did my presentation earlier today, we went through and we took a look at a lot of different markets and a lot of different indicators, looking at the personality of the different markets that are actually out there based upon how they interpret and how they react to a lot of these indicators. The depth gauge being a trend indicator, and the fact that we're in this neutral stage, and that neutral stage is limited, where this doesn't really trigger all that frequently. It begs to look at that kind of a market, and that's obviously what we're doing here. So we're short the market. We'll see what happens with the depth gauge, if it's actually able to go from a neutral phase to a bear phase. And a lot of that's going to be based upon how things kind of react to the seasonal tendencies here in the next maybe week or so. And best thing to do is just simply come to the site and start looking at some of the seasonal tendencies, the seasonal cheat sheet and things of that nature. Or you can just simply do the easy thing, which is watch the systems. So with that, hopefully that's of interest to you. And if you're interested in the webinar that we did earlier today, you can always just email me, or I'll be posting things on Twitter where you can have an easy way to log in and see the 1-hour presentation that we did, where we looked at a lot of these different types of indicators and went through the kind of a review of the personality of the different markets based upon how those indicators react to the market. So with that, we will take a look at another market tomorrow. Thanks very much for watching. Bye-bye.